Good morning. This is Saturday morning here. So I'm doing my weekend video real quick. I'll try to keep it as slow as I can. So, main takeaway you're going to get from all of my charts here, we're starting a new quarter lined up with exactly at last quarter's open on all kinds of charts. And I do want to point out, guys, I had some sell signals on a lot of stocks going into the last 10 minutes of Friday. And they came in with the 401k money and they held on to that to the last 10 minutes. Basically, they waited for all the money on close orders to come in, and then all of a sudden they came in and they supported the markets right into the close Friday. So really dangerous situation for the weekend. So we will see what happens here. So some of the charts that I'm looking at here, we're doging out one day in the market so far, and we barely held the quarter open. So the 3-month open prior, we barely held that for the first trading day of the quarter. Okay, heads up on that. So that's one of my first takeaways here. NDX, same thing. Right here, we're fighting that opening print. That's 3 months of value in that one candle right there. And we're fighting that opening print for one day into the quarter. This is not a scenario that I think's healthy for the markets to be opening right there at support to start a brand new quarter. Russell, same thing, guys. Right down there, right at that bottom there. So guys, we closed really bad here on the ZNs. So we're already breaking 3-month lows here on our ZNs to start the very first day of the quarter. So be aware of that. We have a closing print below that. And that fed into, also that's going with the ZBs. This one here is not quite as clear because they did manage to hold it that last 10 minutes as well. So one day into the quarter here, we are breaking 3-month lows here on our high yield bonds. So we got this is all stuff, very dangerous stuff going into the first of the week here, knowing that we're breaking uh, quarterly positions the very first day of the uh, quarter. So be aware of a situation like this. J&K, these are corporate bonds, and these are major costs, input costs for businesses. Breaking J&K, LQD. That's your high yield or high grade corporate debt. We're breaking even harder on the high grade. And the reason I feel that they're breaking even higher because the Federal Reserve is not going to be supporting this whole sector of the market anymore. And so we do have an even more distortion in the high yield bonds because the mega techs have been supported by the Fed so long. And one stock really getting decimated. We're already breaking out of my channel. That's Citigroup. Citigroup is really starting. That's why I'm using my quarterly charts here so people can get a relation. Exactly, we're getting 3-month breakdown scenarios setting up here. Oops. Some other charts that I'm looking at here, Intel Corporation, we're right here, right on the verge of breaking down on Intel. And we've had a really bad couple of days here on Intel. So Intel looks like it's ready to just puke, in my opinion. Goldman Sachs, top of my list here, right down here. So many, there are charts all over the place. Similar situation right here. We're just barely holding our 3-month open. Okay. So just keep that in mind. One day into the quarter, we're barely just hanging on by a thread. And what really bothers me is these megatechs, these Nasdaq 100s, and the fact that we have an initial LQD is selling off harder. Like I said, we had the Fed distortion in the markets. Those things could really get hit in the coming weeks. So I do want to float that here, right here, quarter open on Microsoft. Okay, Nike. I'm just going through a lot of these Dow components here. Nike, similar situation. We broke and we came back up into the close. Cisco, similar situation. They did manage to save it a little bit better than some of them. Home Depot, right down there, the same as all the others. 3M, right down here with all the others. McDonald's, which is heavily weighted in China. Well, they're losing all their Russian assets. China came in with recessionary numbers coming, actually deflationary, actually manufacturing numbers that came out Friday. Horrible numbers out of China. So, similar situation. McDonald's is probably going to get toasted here. Honeywell, right down here near the quarter lows. Boeing, near that quarter um, uh, closing price, you know, low there. So it looks like to me a lot of these are about to break. There's this all kinds of breakage everywhere looking ready to happen. Amazon, Nvidia. Okay, Nvidia actually broke and they managed to rally it back in during the cash session into the close there. So it was one of the strongest into the close. Google, Google right down there near those lows. Tesla. These are quarter open lows, okay? Quarter open low there, guys. So that's just a bunch of the stuff that I'm seeing here on the quarterly time frame that's going to be could potentially be a problem in this market. So definitely keep this on your watch going forward here. And I do want to point out, I was waiting for the last 5 minutes to make a trade. I was actually thinking about doing a swing trade short. I had Apple, Microsoft, Tesla, Amazon, I think there was a couple others there too. They were all giving me swing, sell, short signals, and that last 10 minutes they came in and they negated the setup. Okay, that's how close we came to me actually. And I'm a day trader. I hardly ever take short setups, but I'm telling you, we're right there. I mean, and I don't know. I don't know what the first of the week's going to bring. I'm just saying I'm really, really worried, and the LQD is telling us that some of these mega caps are going to see some significant sell side action. Also, Qualcomm got really hit. I didn't see that one. I was calling it out. Qualcomm broke. Okay, we broke and we managed to 46. Okay, yeah, it broke. So it had a clear break of that quarter here on Qualcomm based off that China data that came out. China data was just horrible. And I actually thought Apple was going to break down. Didn't even think about Qualcomm. Qualcomm was one of the biggest percent gainers Friday. So initially, I mean they were up 500-600% on some of those options, and so just heads up on that going forward. Similar situation, and this can be now they are pricing in. Guys, look at this. They're pricing in, and most people didn't catch this. They are pricing in a 75% chance that we're going to have a 3/4% rate hike on the next FOMC in May. Okay, not 50%, 3/4%, 3/4% rate hike in May. So that's 3 times what we just had. Okay, that's exactly, and that tends to be really bad for tech. Okay, guys, so heads up on that. Most people did not catch this. This is not a very good situation. Okay, so I do want to float that idea. Okay, and one major other thing that I do want to point out here. Okay, everybody, and going forward here, you see the 2-year right here, the 2-year. Okay, there you go. 2.44%. Look at the 30-year. Tell me if that is not going to cause problems in this market. You know, to most people just look at the 2-year versus the 20-year, okay? But the fact that the 2-year and the 30-year absolute flat yield curve right now between this is devastating for this. This is potentially devastating for the banking industry. So be aware of that going forward here. So knowing that, what do? I go over to the financials, XLF. So we're right down here near the bottom. We got a fairly tight body. You see at the long wicks, tends not to be, this is an indecisive candle, okay? So we're going into the first of the quarter with a very indecisive candle. This is these are transition candles, okay, on a quarterly basis, typically. So be aware of that situation going into today. And the one area of the market that gets hit the hardest on inverted here or flat or inverted yield curves that is your regional banks. Okay, we did break. We had a closing print breaking below the body of the past 3 months here for our regional banks, and we're coming outside of a channel on our regional banks already here. And these are the banks, the money lending banks. They're the ones that give out the loans to the public. These are the ones that give out most of the mortgages and stuff. These are the guys, and if you got flattening yield curve, all of a sudden they have to raise their standards for giving out loans. So you have to, they're all of a sudden they don't want to be giving loans out to people with just so-so credit. And what Uncle Sam's doing to hide a lot of what's going on, knowing that the banks are going to have to raise their standards. Now all of a sudden, in May they're throwing out any medical bills on the credit scores. So now they're not even going to compute medical scores on credit scores anymore. So that everybody's going to get this big rise in credit scores come May because their medical history is no longer going to be computed in the equations. Tell me if that is not quite deceptive. And basically, they're redefining how we gauge risk in the markets, and that has the potential to be so devastating. And I know the current administration is trying to do everything they can to keep the markets afloat into the midterm elections because they need the votes so bad to save, because they're losing seats because of the census. So they not only have to gain seats because of the census, but they got to gain seats for uh, uh, they have to keep the economy going because they can't have anything going wrong, or the Democrats are going to lose possibly the House and Senate. So be aware of that. So one of my major warning signs for this week going forward here, like I said, we were going right into this close here for a potential swing short here for Tesla, and they saved it in the after hours and in the final 10 minutes or so here, the markets on Tesla. And so we do have, I think it's over the weekend, we do have car sales data coming out for Tesla. I'm pretty sure it's over the weekend. Don't quote me on that. And so bottom line is globally, car sales are horrible right now. Everybody, because of what's going on in geopolitical politics, they're not willing to go out and spend big ticket items and for the prices. The prices are high and it's a risk off thing going on. China is in recession. Russia's been cut off from the economy. Europe is in shambles. People are just not wanting to go out and make big ticket sales. Big ticket purchases tend to get hit in an environment like this. Okay, now Tesla has a Shanghai plant coming online, so they got those new vehicles coming out and stuff. And so this is, in my opinion, expectations are so high that Tesla potentially can come back down, even with all the good news. So I do want to really float this thing going forward here. We are into resistance. You see where this cloud is right here on the 4 hour? This is acting as resistance here. And so 1100 is very, very serious resistance for Tesla. So just keep that in the back of your mind. I'm not saying this may be one of the last ones to fall because of everything going on, but tech, stock splits do not add value to the company. All stock splits tend to do is expand price to earnings ratios. Okay, so just keep that definition in the back of your mind. Don't get too excited about stock splits because, like I said, they are not adding any value to the company. Okay, just be aware of that. And then one final read here, guys, going forward to start the quarter here. This is my Dow Jones Industrial on my watch list right here, and this is based on volume. Which ones are the hottest on the volume to start our quarter here? WBA, top of my list. Look at the selling pressure here in WBA to finish out the very first day of the quarter. Now you ask yourself, why in the world would WBA? Let me go back on the quarterly chart, show you where the price is on relation to that. Why in the world would WBA be so bad? Well, basically, WBA is the dog of the Dow. And we now have Google and Amazon. doing share stock splits. Okay, and well, not plus Tesla. Tesla's joining the party as well. So now you're going to have three companies, all of them being priced in the range where potentially they could be added to the Dow. And I think that's possibly what Tesla's trying to do here, get the share price down so they might be able to slide in there and be added to the Dow. I personally think Amazon's going to be the one that's good. I think most people think that, so because of the market capitalization. So, uh, just keep that in the mind, back of your mind and stuff. But WBA, because being the dog of the Dow, it will be the one bumped off the Dow. That's my main takeaway here, guys. So I would not even think about taking Walgreens boots a long term position going into like I said, after all these I think this is going to have a very rough quarter ahead of us going on that, and we could very easily be going into the 20s before the quarter's out here on that one. So I do want to float that out on your trading, and definitely keep that on in mind here. Uh, and see, let me check some others out here real quick. Another one I wanted to point out here was Intel. This is, in my opinion, this has the potential to being kicked out of the Dow as well. So definitely keep that one on watch going forward here, in my opinion. It's been underperforming for a while. And believe it or not, another one here, which I know it sounds unbelievable that this could possibly happen, Coca-Cola. Uh, um, Coca-Cola, because of its share price, possibly could be getting kicked out of the Dow. I mean, they're trying to get the Dow to look as pretty as they can, so they want to get the higher share prices potentially here. So I do want to float that out. I know it's hard to believe that some of these long-term uh, uh, strong industrial stocks, and I also had 3M. I think 3M's on there. Uh, yeah, 3M's. It's more of a modern company as well, but yeah, those are some of the ones I'm thinking that could actually potentially get kicked out of the Dow here. So just keep that in the back of your mind going forward here. Uh, uh, in your trading. So please like the video. Please retweet the video on Twitter if you get a chance. Please retweet it, and please, like I said, definitely like it so I can get faster upload speeds on that. And add comments below. I've had some comments, and I'm adding to my repertoire for you guys from the comments below that I'm getting back from you guys who are watching these videos. So please help me out on that, okay, guys? So thanks a lot for the video, watching the video. I will see you next week.